please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, it's a show where we're going to highlight a whole host of buzzing stocks. For the time being, well, the Nifty is on the back foot. We're down close to around 65 points. The Asian markets are struggling as well. So in step with what's going on with the global screen, the Nifty as well is down in trade. But things are going to heat up, Mangalam, because we have expiry that plays out today, the final day of this fiscal as well. Oof, what a fiscal it has been.
Absolutely, Nigel. You know, expiry, you're talking about expiry. It's not just the Nifty Bank, which is underperforming in today's trading session, down by about 0.75%. Interesting action happening out there. So the most active put is the 24,200 put. My director can pull that one up, because if you take a look at it, we're 50 points away from the 24,200 put. And that one's added close to about 7 lakh shares in open interest. The premium has collapsed by close to around 60%. So maybe the bulls believe that is one dance that they can hold on to, at least as far as the Nifty Bank is concerned for today. But what's your view?
All right, then. So we'll keep an eye out on that dance. But Mangalam, you know, I'm searching for green, and I found some green actually, because JP Associates, that stock was trading in the red. It's moved to the high point of the day, and everyone's looking at Fortis today. That stock's seeing a lot of selling. But keep an eye out on Apollo Hospital. Suddenly that one's done a U-turn. The stock was trading in the red. In the last 30 minutes odd, we've seen a bit of a spike up on that one. So that's moved into the green as well. So struggling to find green, but just thought I'll spot both these two stocks. But what's the trade going to be on the Nifty for the remainder of today? Ashwani Gujral joins us now. Ashwani, what's the trade? Second half of the day, can we see a bit of a bounce, or do you think we're headed south from here?
The market is in some sort of a chop. If you see post the open, we haven't really done a whole lot. We opened like 10,130. We've lost 17 points on the Nifty, hardly 20 points on the Bank Nifty. So it's fairly narrow range. I don't think that there is an immediate breakdown. The markets are sideways and they'll find some reason to recover or go up later on. I think 10,075, 10,080 is a fairly strong weekly support, and as long as that holds on, you should have expectation of upside, if not today, maybe tomorrow, because you hardly had 2 days of a pullback. That isn't really enough for the next leg of the fall. Now, having said that, individual stocks, Balrampur Chini is a sell with a stop of 80, target of 72. Canfin Home is a sell with a stop of 492, target of 470. And Tech Mahindra is a buy with a stop of 625, target of 660.
All right, Ashwani, hang in there for a second. You know, Nigel, we speak about the long weekend, so a couple of things really stand out. Pull up Mahindra Holidays. Maybe a lot of long weekends taking place in one of their properties. Mahindra Holidays has suddenly shot up. It's trading with a gain of close to around 7% out there. We'll keep an eye out on that. Last Friday, I remember we spoke about Raymond's ahead of the weekend. Maybe, you know, corporates taking their suits off during the weekend. So Raymond's now moved into the red from the green. And then I remember Monday you spoke about Page Industries. That one has moved from the red, Raymond's has moved from the green into the red, and Page Industries has moved from the red into the green. Ashwani, Page Industries up 9% this week. What's your call?
I guess something to do with Swachh Bharat. You know, Page Industries, you know, it's an all-weather stock. We've seen what's happened with Jubilant and, you know, Titan, etc. Similar kind of stock. And this year is going to be like that. You have to focus on the basics. So chances are that, you know, 20,000 is a stop, and you could get maybe 25,500. This space will do its own thing while the market remains choppy. All right, stick to the basics. I like the way Ashwani puts that. The bare necessities of life are doing well. Page Industries up close to around 9%. In an otherwise wobbly market. So I think, you know, the priorities are in the right place. The priorities are in the right place, and we thank Ashwani for joining us this fiscal for on Chartbusters. Looking forward to see you in the next fiscal. Of course, we'll keep coming back to you all through the course of this day. Let's slip into a short break. The stock on our radar right now is Quality. In fact, the stock is locked in lower circuit today, fell in the last hour of trade, and if my director can pull up a longer term chart, this month itself, the stock is down 50%. I remember in September somewhere, Nigel, the stock saw
2 consecutive days of lower circuit. It was closer to that 150 mark and is now down to around 59. The company's informed the exchanges that there is no particular significant development that explains this fall, but we have the management with us. Naval Sharma, the president of the company, joining in to give us his take on what is happening. Naval, you know, I remember speaking to you in September when a similar thing happened. You said there is nothing which explains this sort of down move, nothing significant fundamentally in the company that explains this down move. 6 months later, the same thing has happened. Can you tell us what exactly is happening? And at a time when everyone is gung-ho on the dairy space, quality is the only one which is underperforming.
Yeah, you're right. You see, stock price movement is critical, but more than that, what is more important is what is the reason for this shift. Primarily, there could be two reasons. One is there any strategically significant development which has happened within the organization? The answer is absolutely no. It's business as usual. And second could be a transactional reason, where some market forces are at play. So what I can tell you at this point of time, it appears, looking at the pattern, it appears that some negative forces are at play. We are investigating the matter, and once we get to the deep of the thing, we are going to take very, very stern action if something comes to light. So this is what is my assurance to you, right? So otherwise, it's all business as usual. If you look at the numbers over the last 8 quarters, there has been a consistent delivery, whether it is basically margin improvement or whether it is rollout of various value-added products, 4 to 5 categories we have already rolled out over the last 2 to 4 quarters' time. And over the last couple of years, already margins have improved from 6 to 7.2%, and we are consistently moving towards the goal of hitting 9% EBITDA margin by 2020.
All right.
So that's what it is. But I can again reinforce and tell you, appears like that some negative forces are at play, which post-investigation will be able to share with you.
Mr. Sharma, good to see that you're going to be investigating. And I'll tell you what, your investors and your shareholders will want you to investigate. In less than a year, this is the second time that this is happening. So hopefully this time around, y'all can fix it with regard to the negative forces. We can't comment on the negative forces as of now, but what we can comment on is that the promoter holding is around 64%. I was taking a look at the pledge holdings, and I think we should get that chart as well up for you. The pledge has gradually been increasing. Why is the pledge increasing in terms of the promoter holding? You could tell us the reason over there. And promoters haven't sold any stake, right?
Yeah, absolutely. You are absolutely right. See, the reason as to why pledge has gone up, so this is basically primarily to companies like KKR, right? So which is a part of the usual framework under which the transaction has happened. As we told you last time, that there is a debt framework with KKR under which there has been some pledge. And as stock price moves, the pledge is increased, right? So this is purely on account of some business reasons.
So are you...
there is nothing which is unusual. That's on account of usual business reasons.
Mr. Sharma, are your pledge shares being revoked, sold in the open markets right now? Do you have any inkling of that, sir?
Absolutely no. The answer to that is we can confirm that it is absolutely no.
You have spoken to all the pledge holders. You have spoken to all the pledge holders, is it?
Absolutely. So there is absolutely nothing of that sort. So this is what I'm saying is it appears like, looking at the pattern, if you see yesterday's pattern and today's pattern, it appears like that some negative forces are at play.
All right, Mr. Sharma, it's interesting to know that you're saying you're sure it's, none of the shares have been revoked, but the pledge would have been done at a higher level. So, that's something that we should keep in mind as well. And now the stock is down 20%. Anyways, you're saying that no pledge has been revoked. What about the debt in your books? What's the total debt in your books? If you could give us a sense of there. And have all your creditors, everyone has got their money, right? There's no outstanding dues.
Absolutely. The debt is absolutely at 1,589 crores. Right?
Okay.
And so far as the debt is concerned, this time, last time also we discussed that so far as the overall interest cost is concerned, this year, as per the original design, as part of the business transformation plan, interest cost will be touching the peak this year, which is part of the design. From here onwards, we'll see a drastic shift in the interest cost because of 3-4 levers that we are talking about. Now, what are these 3-4 levers? First, the margin profile of the organization is going up.
Right.
EBITDA consistently improving, which means there will be more internal cash accruals and dependency on that will go down. Second part,
right.
Cash conversion cycle of the organization is optimizing year after year.
Mr. Sharma, Mr. Sharma, we get the company's levers going forward. Some clarification coming in from you. We're running out of time right now, so we'll keep an eye out on that. But remember, since September, the stock is down 62%. The street has something on its mind. We'll get back to you. Thanks a lot for joining in. We'll take a short break. Come back. We'll continue our promised conversation with Indiabulls Housing Finance, Gagan Banga, waiting on the other side. Stay with us.
Well, let's get straight to Indiabulls Housing Finance. That's the stock in focus. They're here to discuss the business outlook and also more in terms of their business. We have Mr. Gagan Banga, the Vice Chairman and MD of the company, who joins in. Hi, Mr. Banga. Thanks so much, sir, for joining in today. Well, we were looking at the big movement that we saw in bond yields yesterday. So we wanted to understand what's your current cost of borrowing, and if you could break up your, your borrowing mix for us. How much of it comes from bonds?
So incrementally close to about 80% of the borrowings are coming from bonds and capital market instruments. On stock, roughly about 65% is through capital market instruments, which is bonds and CPs and all such instruments. Incrementally, the yields had gone up, so whatever we borrowed in March would be at about 7.8 to 7.9. Okay. Now with this decline of about 30-40 basis points, it will be closer to 750.
All right. So lower yields, does that mean higher NIMs for you, or is it a pass-through, Mr. Banga?
Both on when rates move up as well as rates move down, housing finance companies being a competitive business as well as a low margin business, as a combination of the two, we generally act as a pass-through vehicle. The largest bank in the country earlier in March had communicated that come April, home loan rates would be moving up by about 20 basis points. That was on the in the background of bond yields having moved up and term deposit yields having moved up. I heard earlier in the day on your channel that banks have a pressure on term deposit rates. So my sense is that interest rates here are flattish to moving up, and home loan rates will act accordingly and would be flattish to moving up over the course of the next couple of months.
All right, Mr. Banga, there's so much of talk about affordable housing. How many units have you financed? If you could give us a rough picture out there.
So we would be doing close to about 8 to 10,000 units a month. Bulk of what we do is lending for affordable housing, since our average ticket size is 25 lakhs, okay, and all of that fits into affordable housing. So that business is growing for us at an annualized rate of between 35 and 40%.
Wow. Right. When does your first round of repayments come by, Mr. Banga? Because your loan book has been growing 30% plus. Is there a risk of asset quality? Are all your loans being serviced regularly?
So these are small retail loans of 25 lakhs,
exactly,
in a structure of an equated monthly installment. So money comes back every month, both a little bit of principal and interest. It's perhaps the best asset class in the country, with loan loss rates as low as 30-40 basis points. There was a very interesting report published by the Reserve Bank in January, which actually compared private housing finance companies with public sector banks and the portfolio quality there. So all private housing finance companies have delinquencies in home loans of under 50 basis points, whereas the public sector banks have between 150 to 200 basis points.
Right.
So for prime home loans, where borrowers are earning about 10 lakh of rupees annualized, that segment is performing extremely well.
Right. I asked this because we earlier had gotten a report which says that affordable housing, the delinquencies have increased out there. The asset quality is perhaps not as good as it looks right now. Maybe there could be some danger going ahead.
Yeah, that's for loans of up to 10 lakh of rupees. That's for loans of up to 10 lakh of rupees. That's been a concern for a while, which is why Indiabulls Housing is not in that space, and we focus at loans at between 20 and 25 lakh of rupees. Lending to the economically weaker section has not been our charter. Okay. And clearly what various reports are indicating is loans of up to 10 lakhs are in stress.
All right, Mr. Banga, very quickly before we let you go, housing finance companies, well, it's been heating up out there. Any inorganic opportunities that Indiabulls Housing Finance is looking at?
So the top 5 housing finance companies control over 90% of roughly the 5 lakh crores that housing finance companies have between themselves. So, and there is, therefore, starting the 6th onwards, there is not much of size, perhaps 1 quarter of growth. So there is a transaction happening as we speak, which has been reported in the papers, which is roughly 1.5 quarters of growth for us. So at that size, it's clearly not of interest. If something of meaningful size comes up, then we will participate.
Okay, all right, Mr. Banga, thanks so much, sir, for stopping by. All the best for the next fiscal year. FY18, you have delivered quite a good performance there. But on that note, we'll wrap up on Chartbusters. You stay tuned. Trading Hour comes up next.